What's up, traders? Welcome back to the channel. So we got a new monthly open today. Welcome to the month of November. The analysis for this video will be pretty much the same on both Bitcoin and Ethereum because they're both doing the same thing. They're in a multi-month range. Needless to say, it has been very, very choppy. We did test and close above support, but this test and close is only 1 day from being under. So it's not like a great bounce yet. Now, we could see the big bounce in the future, but as of right now, it doesn't look that great. This is the range that we're going to be focusing on, and we're going to be using a few tools that I put together here to help us navigate the coming weeks to months. With that being said, obviously the macro still supports a bull market as we are in a Fed rate cutting regime. The Fed is also being a little bit hawkish. So even though we got a cut during the last FOMC, his comments were hawkish. And basically what that did was that brought down the percent chance of another rate cut in December. So here's the probabilities for the December cut. It was almost 100%. But with his hawkish comments, you can see that the markets have repriced that down to 63%. So now it's just a little bit more than a coin toss for if we're going to get another cut this year or not. That could be why we're seeing Bitcoin struggle here while other markets are trading at all-time highs. Cutting interest rates does support a more macro bullish look. As far as price action goes, we have a more defensive bias right here. Long term, as long as we're trading above the July low, I like Bitcoin higher, and I think it could go higher. But with that being said, on the near term, I have a bearish bias because of where it is currently trading. So let's go take a look at the near term charts. On the chart right here, I have the two averages. Both of these are the 21s. So these are both 21 exponential moving averages. The yellow is the daily and the blue is the weekly. As you can see, we're still working on the weekly close. Tomorrow will be the weekly close for Bitcoin. So this EMA will be priced out over to here at the close tomorrow. And if Bitcoin rolls over today or tomorrow, then you're probably going to see a downside cross and we could see a move lower here. That's why we kind of have a more near-term bearish bias. So we're just going to continue to look for shorts on Bitcoin as long as Bitcoin is trading under the weekly 21 EMA delineated here by the orange line. The price is 111, 165. It does look like it's trying to break down. I'm not even going to joke around about it. We did have a nice move up and we did get back above. And last week it was a good looking close because if weekly candles are closing above its 21, then I like the market to the upside or it has upside pressure. Now, at any point, support can come in. At any point, the buyers could take over, but we can't see into the future. So this is why we use the weekly 21 average to guide our near-term trading decisions. Last week closed above, so that would typically have us with a bullish bias. But as you can see here right now, you're trading under it. So you're threatening another close below it. We've already went down and took out last week's low, and that's where we've bounced from. And now prices is pushing back into that area. You did close above monthly support, and you can see that here on this monthly chart. Yesterday's close was above this close, and that would be the near-term monthly support. We're just 1 day into the new month. Yesterday, you failed to close under. I believe people would probably be positioning themselves for longs at monthly support, but only time will tell who wins that battle. So as of right now, we have a near-term bearish bias and we will be looking for shorts as long as we're trading under Friday's high. Above Friday's high means you're trading back above the weekly and daily 21 respectively, and I would be looking for upside continuation at that point. So that's kind of what we have working with here. So if we get rid of all the lines and just look at the averages, we don't want this thing to cross. Now, if we go back in time where Bitcoin was trading in a multi-month range and then it broke down for the bear market that we had earlier this year, you did get that cross. And that cross, it didn't look good back then either. However, it spent a lot of time accumulating down there, and it actually built in a Wyckoff accumulation formation, which is just a 3-drive bottoming formation. As of right now, we have a 3-drive topping formation, so a lot of people are seeing this as the top, or the bull market run is over. The 4-year market cycle says that you should start looking for shorts in November. So a lot of people are preparing for that 4-year market cycle model. The macro still supports bullish thesis, but there's a technical sell signal and the 4-year cycle model. So to keep you on the right side of the markets, that's why I'm doing this upload on Saturday. If you get the cross tomorrow, then of course you have to be defensively positioned. You have to be positioned in shorts, looking for the market to roll over to protect your long-term Bitcoin holdings. If you're scalping, then it doesn't really matter what's going on, right? This is just mostly for the macro, what we can expect moving on. So tomorrow will be important because you're going to get a new weekly close. We'll see whether or not we get this 21 cross. Last time it didn't work, and then over here through Q2 of 2024, Bitcoin was in a multi-month range back then as well. And in that multi-month range, you've seen the weekly and daily 21 average cross many times. And it didn't really give us any continuation for the downside cross. And then again, when we got the upside cross, right? It was just chopping back and forth, up and down. That's kind of what we have going on right now. That's why I think it will be important to monitor July's low, because when you break that low, you are objectively breaking down out of a 5-month range. So therefore, the near-term trend would be lower, and you would be seeing that trend take place. You're not trending down, you're chopping sideways, you're in price discovery. But if you're trading below this and you're getting downside continuation below that point, then obviously you have a fresh range breakdown, and obviously that would be more bearish than bullish. So that seems to be the problem with everything right now, obviously, is because Bitcoin is chopping inside of a big range and people are having difficulties getting positioned. So October, the first week, was a nice big bullish push, making a fresh all-time high, and then we got the China trade war news that caused a massive sell-off on Bitcoin. It caused almost a black swan event. But since then, Bitcoin has not been able to get anything going back to the upside. This has everybody really bearish. I think as long as we're trading above the July low, we're going to be looking for longs, but as long as we're trading under the weekly 21, we are looking for shorts. So it makes it a very confusing trade. So it's easy enough to be right here. You don't have to do anything, right? You can simply sit on your hands and wait to see what happens. But I think the best risk point, or the point to stop looking for shorts, is definitely Friday's high. Because once, like I said earlier, you're above that, you're potentially looking at a break to the upside. So if we get back above the daily and weekly 21 exponential moving average and start to threaten this swing high, then I would assume price was going to go up a little bit. But just trade the range. Don't get too fancy. Make sure you keep your risk at a minimum when it's chopping around like this. You don't want to be getting stopped out too many times trying to position for a big move. If a big move is coming to the downside, then like I said, pretty easy to look at where you should be positioned short. So basically, to wrap the video up, if we get the downside cross where the daily 21 is under the weekly 21, then you got to have a more weaker near-term bias. But if the cross doesn't happen and prices get back above those two averages, then obviously you would kind of need to have a more bullish bias moving forward. And just try to be careful and mitigate your stop, so that way if you get stopped out trying to position for a big move, it's just a small loss. This way, when you ultimately do catch the move, by being positioned on the right side, you will make a lot more when that big move happens, and you will cover the small losses you took trying to take that position. Make sure you trade safe, make sure you trade smart, and as always, happy trading, everybody.